Good afternoon, everyone. Thanks for coming. This webinar is about Japanese candlesticks. We'll be talking about a plain vanilla technical analysis, Japanese candlesticks. But my aim with this session is to go a little beyond the very basics of this type of patterns. It is twofold. My aim with this session. We may think of we may use of technical analysis or basic technical analysis of plain vanilla instruments and achieve a good rate of success and have indeed a good analysis despite being using tools that are seen or used by the majority. Okay, so on one side is my aim is to encourage the audience to study some of the areas from technical analysis which initially may seem too obvious or too basic to study, but like technical analysis, like candlestick patterns, which is a very common topic, but which requires a great level of depth in order to be used with some success. And on the other side is specifically about candlesticks is the fact that we too often don't dig very deeply into the messages that we get from the candlesticks. And the truth is that most of the traders and in the FX arena are using candlestick patterns, but I think only very few of us are really getting all the information from the candle formations that are in front of us all the time. Okay, so in order to do this, we will go into the formation of some of the patterns. We'll look into what in a first view may seem very basic, but little by little we'll start discovering some of the aspects that provide us an edge in the use of candlesticks. Some of the aspects that are important when identifying a pattern when trading based on a pattern. Okay. Let me start by drawing something here. Okay, something like that. Okay. Let's imagine we have on a chart we have a candle looking like this. Yeah, and we may start asking what type of pattern does this formation suggest? And in this case, it can be a hammer, right? It can be a hanging man. Philip's saying trapped sellers. Very well. It's what Philip is mentioning here is the action that is behind the pattern. What happened during the formation of the pattern, and what is the message that at the close of the session, the message that you can get from it, from the perspective of market participants, who is in the market right now, and those that took decisions along with the formation of this line. Where are they now? In what kind of position? Are they winning? Are they losing? Yeah, right. And right, Philip. Those who imagine that during the formation, in case we are here speaking of a bullish reversal, that is a hammer candle. The names, I will mention the names of the patterns, but they are well, of second importance. If you are trading, they are of importance. Obviously if you are writing analysis, you want your audience to know what kind of patterns you are looking to, and well, the names are useful in that context. But if you're trading, the names are probably secondary, but important is the message. So really, if we see that pattern after a fall in price, or even it doesn't have to be, in case of a hammer, it is not required that the decline in price is very pronounced. It can be a mini bottom during an uptrend. But important is that during the formation of this candle, at a certain moment, this candle looked like something like this, right? I will separate this. At certain moment, the pattern looked something like this. We had a descending trend, and at a certain moment we had what looked like to be a bell hold pattern. In that case, a full body and a bearish candle pointing down, and many people obviously are selling at these levels. Right, they are selling at the bottoms, probably during the formation of this candle. If we imagine this to be a daily candle or a 4-hour candle, during 4 hours, a lot of news can be printed. Right, a lot of reports can be made, a lot of times can you see this new low, if it is effectively a new low being made here, weekly new low or a monthly new low. You will see probably the media announcing this fact, and it will create what is called a positive feedback mechanism in the sense that the price movement initially triggered by any, well, it can be fundamentally driven, it can be order flow driven, a combination of both, combination of many other factors, and while this is forming, the media will inform about these new lows, will inform about the volatility, will inform about the trendiness in this market, and those who haven't at that moment, until that moment, haven't heard about that new low, will start receiving that information and will start acting on it. Yeah, and it may create a sort of feedback mechanism that people during the formation, let's say during the formation of the candle, will start to short in at a certain point, leading the price even further lower and lower, creating this amplifying mechanism, this positive feedback acting on the information that is arriving to the market, and obviously someone is the last one to sell here at some point, but during the session somehow the sell orders dry and sorry, and oops, what's happening with the drawing tool? Okay, at some point these short orders, they try, and we have this pullback to the upside, making what is called a bearish reversal hammer pattern. Okay, and here you have those who shorted at the end, figuring out what has happened, and looking to cover their positions as soon as the market continues to to react to higher levels. Okay. But he asks what time frames are best when using candles, and the question is interesting. So far as in our example here, we have mentioned a 4-hour period. There is from the theories, from the basic theory in technical analysis, there is no best time frame, so to say, because the patterns have to be seen in conjunction with so-called Western technical analysis or Western instruments. You may combine it with support and resistance, with oscillators, or more sophisticated indicators. The important thing is to not consider the candlestick patterns to be a system by itself, or the patterns to provide any kind of trading recommendations. A hammer pattern is not an invitation to buy, even if it's a perfect ideal pattern occurring after a decline in price, having the real body in the two upper thirds and a long lower shadow, and so on and so on. Even then, it is not a signal in itself. In itself, it is not a signal. But if you see it, the lower shadow is reacting to a previous support level. Let's say you had a support level, a low here from previous week, or you had a V-shaped low somewhere there. Okay, let's put here. Pardon. Okay. Okay, we had a V-shaped low somewhere in this area in the past. And what we saw during the current session is a breach of that low, and here breakout sellers being trapped in a rally, in a subsequent rally. So if you see that pattern happening in a context, and this may be helped by another technical information derived from an RSI or any oscillator, and you can combine the whole information into a meaningful signal, then you may consider it a valid trade signal. But by itself, the pattern is not a signal. So it's not. There is no answer as to if there is a best time frame to use it. But there is one thing that is probably important to take into consideration, especially in a 24-hour market, and this is a point that has been mentioned many times in the webinars by different experts, is the fact that if you are using, for instance, a 4-hour or 8-hour candles in your, and the same would be valid for bar charts. If those 4 hours that are inside, let's say inside a formation of a candle, are partially made by one trading session, and the other part by another group of traders from a different geographic location. Let's say you have that 4-hour candle formed initially by the traders at the end of the Asian session, and then the last hour, let's say, by the start of the European session. Then you have mixed messages within one same candle, and you probably want to adjust that. You want to adjust your charts in order to have the 4-hour candle beginning with the new European session open. for example, in order to have in those 4 hours to have the message that the market leaves and printed in that pattern belonging to one group of traders and not to two groups of traders with different daily targets. One group of traders which is ending the trading session, and another group which comes fresh to the trading desk. So we would have probably mixed messages in one candle. Philip asks if a hammer candle can be a bearish sign. For example, if it closes below a previous support. Let's say if we had that support here and it closes below, if that would be a bearish pattern. Indeed, these fine nuances, and it's a good question that Philip mentions the close price. And you see, during the formation of the candle, and the fact that candles are so much more clear to read compared to bar patterns, is the fact that the open and the close form what is called a real body. So you can really see through the body. You can see what was the momentum for that session, the direction, and the strengths in terms of momentum by the size of the body, and you can easily detect where is the open and where is the close. And indeed, these are important aspects when you analyze a chart. And if there is a close, even if it is a hammer, and you have a close below a previous support, this hammer candle will still have a bullish who into it, a bullish message because of the lower candle, right? The last trace we have from the hammer is the fact that it hammered at bottom somewhere here. It hammered at the bottom, and it went from there on. It went up. It couldn't probably close above that support area that we were watching. But the last message that we get from this pattern is an upside move, right? So the pattern would be, let's say, less bullish because of the close being below the support, but still it would still transmit that bullishness because of the lower shadow. Okay, you can get more nuances by the size of the shadow compared to the bottom. You could have more nuances by looking in a lower chart. That shadow, how was it formed? Was it formed if it is a 4-hour chart? Was it formed in the last 5 minutes of those 4 hours? Was it formed in the first hour? Where was it formed? So was it formed in the first hour, and after we had this close swinging here above and below what we consider to be the support, and finally closed below? In that case, the close below the support, well, would be less meaningful. But if during the last period of the candle the body was unable to move beyond that level, then perhaps it is a more bearish sign, or a less bullish sign. Okay. So in this case, Philip goes on with this question, asking if it is then a breakdown and successful retest. as I understand, you mean a break of this of the hammer's close, so to say, and a retest of those lows. If you, I think the confirmation in that case will be foremost a close above the real body, break off the support and retest of that level. We don't need necessarily a retest of the lower bottom. You could have a double hammer printing here. So you could have another hammer being printed side by side to the next one, but the confirmation of the hammer would be a close above the hammer's body. Okay, and it's worth saying that the hammer in itself, it's not a candlestick pattern that requires confirmation because of the message that the lower shadow leaves on the chart. Okay, but other patterns of the same nature, of the belonging to the so-called umbrella lines, like we initially we mentioned it. If this would be, for instance, a hanging man. Okay, we have an ascending move. Let's forget about these items here. We have an ascending move, and then we have this so-called hanging man appearing on the chart. Okay, and the hanging man is a candle pattern that requires confirmation to act upon it. Okay, requires confirmation because the message within the formation of the hanging man is the same as with the formation of the hammer. Okay, there were some sellers here that because it was printing a lower low. Let's say we had a low here, and because it was closing, or it was on lower time frames on an intraday scale, it was breaching those previous lows. So there were some sellers capitalizing on this reversal, but finally the buyers came in and showed some strength, some willingness to keep buying that market, and you have that message. You have an uptrend, you have an intent here of a change in trend, but finally you have that bullish lower shadow being printed here. Yeah, and the candle can be two color. It can be made by a green body or a red body, or black and white. It's bullish, bearish. The thing is that the umbrella lines can be either color, and they would classify as a valid pattern. Okay, well, whereas you have other candle patterns that require a specific direction. In the case of umbrella lines, it's the two colors are valid, and in this case you require a confirmation, and the confirmation would be a close above the highs of the hanging man pattern, so to say. Okay, in that case you require confirmation. In the case of the hammer pattern, no confirmation is required because it is a strong enough signal to act upon, or better said, not signal but pattern, strong enough to act upon always, as I said in the beginning, if it is combined with other technicals, not by itself. And also, if you found if you found that pattern in the right context, okay, that is after a declining price or a mini bottom, okay. In the case of a hanging man, you need a more pronounced upward move preceding the pattern to have a I did a small mistake here. The confirmation by confirmation. This was the case of invalidation. This was what I just said of the close above the high of the previous. That would be an invalidation of what would be considered a reversal pattern. The confirmation that is required, beg your pardon for this confusion, the confirmation would be a close of the next candle below the real body of the hanging man, and ideally a close below the low, below the shadow. Okay, that would be an ideal confirmation of the trend change, and would point to further weakness. Okay, so hope that there is no confusion about that. Okay. On a lower time frame, that hammer will look like a break of support followed by a successful retest. Yes, that would and that shadow would be like could look like a V-shaped chart, okay, or price action. It depends on which speed we saw in the formation of the lower shadow. It could be a U-shaped formation, that is a decline like that, and then a movement like that, and a movement like that. But it could have also a movement like that, and like that. Okay, so the messages are different. But finally, what you see is a lower shadow. But it can, on a lower time frame, it can look different. It can even look like a double bottom. Yeah. Okay, you can. These are things that you may look into when you dig into lower time frames. Okay, but it's not necessarily. I mean, the candlesticks are made to work on one time frame, always confirmed by other technicals. Okay. Let's erase and start here a new pattern. Let's say, for instance, we have on our chart we have these emergence here, emerging a pattern like this. We have an ascending move, and we have two black candles, two bearish candles, and one let's say encompassing the range of the previous one. This may sound or may look like a bearish engulfing, which is a common pattern to many. But I mentioned this aspect because a bearish engulfing wouldn't look exactly like this. Bearish engulfing would like to have here a bullish candle, and be the first candle being engulfed by a bearish one. That in the context of an ascending price movement, that would classify as a bearish engulfing pattern. Okay, I mentioned this because not only the name changes. In this case, if we don't have shadows in this case, it would be called a bearish belt hold. Okay, in that case, and basically we were anticipating a continuation of the reversal, yeah, because of the shape of the overall structure, but in terms of what happens to market players, what is happening behind the scenes is the fact that at some moment during the formation of this pattern, we have this ascending move here, and imagine the price is making a new high every day, and on the fourth day it prints a new high. It can even gap a little bit higher, and let's say there is no gap, but just a continuation, okay, and a new high is printed, okay, and that new high is a consecutive new high. We had several new highs in the days before. You can bet that the media at this time is crazy about this new high, okay, they are printing news and highlighting everywhere that this market did another new high. And this is creating the positive feedback mechanism that we just mentioned. If those latecomers reacting to this positive amplification, positive feedback amplification mechanism, and are buying at the highs, if the next day, let's say, opens ideally for the case of this engulfing pattern, opens with a gap, okay, opens with a gap, the ultimate expression of the continuation of that bullish trend, showing that there are really very enthusiastic buyers wanting to adhere to this trend and buying at the upticks, and the market gaps higher, but somehow that demand dries up, and we have a close below the previous day, which has served as a motive for the media to inform the vast audience that the market was making a new high. So the message here, or the reaction of the market players would be different than if we had a previous day opening up but already closing lower. Okay, so the message changes not drastically but substantially. If we have a dark cloud cover, or if we have a belt hold, okay, and the name here we change the name, and we may say, well, it's another name just to memorize. The name is not important as such. It's more important is the message. What may the traders be feeling about a new low after a day previous day which was already negative, or a new low after a day which was still a bullish continuation. Okay, probably if we have a belt hold after a negative day, this is more of a confirmation that the small reversal seen yesterday was not only a lack of interest of buyers, but there are probably some interest beyond among the sellers to enter this market and sell it, and they could bring the market to close lower in case we have a bearish engulfing. This is a surprise for many of the buyers here. Yeah, this is a surprise, and probably many of the positive feedback buyers will have to liquidate those long positions, and this may contribute to even more downside momentum the next day. Okay, so these little nuances are sometimes also interesting. Same as we imagine we would have here. Well, we keep that bullish engulfing, and that bullish engulfing develops into something like this. Okay, develops into something like this. Normally, a textbook explanation says this is a three black crows pattern. Okay, and I mentioned here in this pattern because many times we classify this pattern only when we see long bodies, tall bodies, and but one of the nuances of this pattern is the fact that that there is no criteria as for the size of the bodies in the three black crows. The same is as when we see the opposite, the equivalent, the three advancing soldiers. Ideally, you have three consecutive candles which open towards the close of the previous candle and close near the highs. You may have shadows within these candles. Okay, you may have shadows, but you don't want to have very large shadows. Okay, and depending on the compression of your chart, make sure that that the amount of price difference that the whole pattern made is has some significance. Yeah, in terms of volatility, the volatility in terms of amount of or magnitude of the movement. Okay, and compare it to previous or recent consecutive bullish movements, and see if the amount of percentage change or pips made by this pattern was seen somewhere in the recent price structure. Okay, this pattern is a continuation pattern, and I take that also as a chance to mention that not all patterns in Japanese candlesticks are reversal ones. Even if the most part are reversal patterns, but we have some continuation patterns. This is one of them, and this is considered a pattern more for long-term position traders, and but it can be useful for the short-term trader, in the sense that many times the second or the first candle act as support on a pullback. Okay, so here we might take note of this fact that because of the rapid ascending move, there may be some buying orders here on the way up that will be activated on a pullback. So these candles are best not acted when they just formed, but waiting for a reversal and pullback. But again, if you follow the media and and this is, let's say, this is a daily chart, and you have daily highs here, new highs being made. Probably you have the media here very enthusiastic about it. You have the media very enthusiastic. We had recently, I think on our network, a post made by one of our people. It was a message from a big bank announcing that euro yen was on a buying mode, and that more buying was encouraged. Okay, and a more experienced trader will look into the chart, will see already a full-fledged movement in the last 2 or 3 days to the upside. So buying at the highs is probably not the clever choice. Okay, but the media turns every new high into news. So probably during the formation of 3 advancing soldiers, you have a lot of news being printed regarding these new highs. Okay, and there are variants. There are variants of this pattern. One of the variants can be something like this. You have you may have shadows, upper shadows, lower shadows, doesn't matter. You may have something like let's say like this and this. Okay, you may have. Let's forget about this. Yeah, you may have a first large tall candle, and then the successive candles are still making new highs, but with less momentum. Okay, this would be called an advanced block. Okay, and if you have something like this, 2 small candles making new highs, which follow a large candle. This is also a variant of the 3 advancing soldiers, but it is called a stalled pattern. Okay, still bullish. Right, pattern. This is still bullish. Yeah, and the media will still be calling for more buys here. But if you look to the charts, you will see that it's making new highs, but with much lesser momentum. Okay, so the differentiation sometimes with these variations of the candlestick patterns carry a message with them, which is also interesting to at least once to see. So many things are important when we watch candlestick patterns. Not only if they fit the form, or the relationship in form, the relationship of the shadow to the body, or the bodies among themselves in cases of patterns which are made of 2 or 3 or more candles, but also the place where that pattern emerges. Right? We have, for instance, here on let me share with you something here. I will share here another application. There is a candlestick watcher, a widget on our site. It's called the candlestick watch. Right? We have that candlestick watch right now, identifying a piercing line and a hammer in the euro yen. Okay. Piercing line detected in a 1-week time frame, and the hammer on the end of on the daily time frame. Okay, and this, like many candlestick robots or pattern detectors, we made this tool flexible enough to account for many variations in the patterns, but one of the things it can't do is to look for the location. If the location is ideal to find that, to identify that pattern, or to take that pattern seriously, and the message that comes with that pattern. Okay, so This is something that you may try to follow as a sentinel, which will tell you which kind of patterns are and where. But finally, it is the trader, the analyst, which who has to verify, to combine with other tools, and to validate the pattern. Okay. So you will look to things like how are the closes of adjacent lines related to the close of the candlestick we have. Okay, the closes, for instance, or does a pattern confirm a prior pattern at the same price level? Do I have that piercing line, for example, here, confirming another piercing line from a few weeks before? For example, so you want to have patterns confirming other past patterns, or do we have a cluster of patterns magnifying the significance of a support and resistance area? Do I have a hammer followed by a morning star, for example, which are two bullish reversal patterns? So, we can also use this as a filter in our trading to look for clusters of patterns in one time frame, clusters of patterns among different time frames. Okay. Is a pattern being confirmed by a technical indicator? For example, divergence. Is there any divergence with this hammer that we are seeing here? Is there a bullish divergence happening, or a hidden divergence? A bullish hidden divergence confirming that continuation of the bullish trend after that small reversal. Do I have information from technical indicators confirming that? Okay. And also, like we said, are traders who acted upon a prior pattern now in a losing or winning position? Okay. Are they covering the positions? Are they adding to them or taking profits? Are loans being vacated? Are protective measures being taken? The defensive action? So you may try to imagine what traders acting on a previous pattern or a previous candle formation may be thinking or acting now. Okay. Or if you see two adjacent candlesticks making the same high, like it's what we call a tweezer pattern. Okay, making two equal highs. A tweezer is not a pattern in itself, but it's just a something that you an aspect that you add to the patterns, giving them more importance. Okay, if two patterns are adjacent and besides they made the same high or made the same low, this is a strong message you want to add to. Okay. Let me come back to the previous. I think there was a question. Let me check. Oops. Boyke was asking where we get this on the site. You may referring for the you were referring to the FX studies. I can give you the link. Just 1 second. Specifically, it's okay. We have just 1 minute left, I'm told, so we're wrapping it up. This link will take you to the same site we were looking at, to the Candlestick watch widget. And if you accept it, if you want to keep it, then it will be inserted into FX studies. If you have never been in the FX studies section, you will see, but if you are registered into the site, you have one. It's like a dashboard with several indicators where you can play around. They are modular, so you can shape your indicators and the information you want. A lot of information from the site is there in form of reports and so on, the calendar and so on and so on. So you can configure it to your needs. And but you need to register in order to personalize it, so to say. Okay. Welcome. Okay, so we wrap it up here. Hope the session has been somehow useful. We have covered a lot of patterns. There are many more, but at least I hope I gave some ideas about a little more forgotten or hidden aspects of candlesticks, and that if you have an interest, this is a whole area to investigate, and a lot of fun. It's very visual, and I think you can get a lot of useful insight into how the market works, into understanding the charts, because a lot of psychology is embedded into the explanations of the different patterns. All right, so welcome, Philip. Thank you. Appreciate your opinion. Hope you enjoyed, and well, we meet in the next session. Have a wonderful day and a nice continuation of the week. Bye bye.